volume, so can't really do much. Gold, US 30. Nah, I gave up gold today. It's been, you know, there are days when, you know, just don't feel it. What other positions do you guys have open? I've seen Ali was doing really well, but in Euro pairs, others on GJ. He's still touching crypto after what happened? Fuck off, gold. Look at that massive fucking drop. It came back to the daily open now. Or what did it open? 28th Monday? A bit lower than, yeah. But it's levitating close to the daily opening price.
Experience.
The weekly opening
is
price.
To feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye.
Who's buying gold?
On or by the edge is our playground. With a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
All right.
Well, Euro USD is dropping, so that's a bit of nice profit.
I'm not sure on the gold today. It's been an absolute prick, just banking me all day with the stop loss hits. On the other hand, US 30 is 2 positions that is running in excellent profit. Do you want to get spanked? No. But
I moved it to break even. So, okay.
Did you enter into a buy?
Yeah, did a lot, took some partial and then moved it to break even. I'm at 1751.6.
Yeah. I mean, technically speaking, we still have more room to fill to the upside, but it just whiplashing all day. This from the sell-off hasn't been filled. I mean, look at this. Look at this gap that needs to be filled.
Don't you think, Thomas, the US 30 is going to go up to fill the gap?
That was why I was scared on US 30 today. I was concerned, not scared. Because, yes, we have a gap there. But, you know, it's not always the same day. You know, it could be that it comes lower and then the next day comes to fill the gap. The sooner or later it will fill. But if you have a look in the economic calendar, we don't have any catalysts today. Apart from the central banker speeches. And Christine Lagarde is speaking. We have Bullard, we have Williams. But nothing major. This week, the prime days of the week, definitely going to be Wednesday, Thursday and Friday. Exactly that what we discussed in the morning briefing. Keep your eyes on China, because if you see any negative kind of news out of China, that we're going to have the same kind of reaction that we have today. So this morning, the Chinese markets or Asian stock markets closed in red. I mean, look at this. Hang Seng, Nikkei, they all closed in red. I mean, almost 2% on the Hang Seng index. It's quite substantial. So if you have any bad news coming out from China, then the stocks will be scared. This was the reason why I entered into short positions this morning during the morning briefing. But yes, to answer your question, we still have that gap, which may or may not going to be filled. Who knows? If you have any positive news that can help to push up the stocks, for example, if we have the data from Black Friday sales, and if it's, you know, bullish for the stocks, then it can easily push the price up. But until this resistance doesn't break, I will be in a short position. And going down a lower time frame, we already started penetrating this wedgie exactly the way I draw it for now. It doesn't mean it's going to happen. This is not financial advice, but so far it's looking good. So, but as always, starting the analysis with the fundamentals and not starting with technicals. There are no major news that could, no major economic events that could move the market apart from the central bank speeches and of course Lagarde's. These are the heavyweights, but the problem is that these central banker speeches are not black and white. It's not easy to translate. Obviously, if you listen into the conversation or the speech, then you can translate whether it's hawkish or dovish, but it's not a number like GDP. Tomorrow we're going to have consumer confidence in the US. Now I think this might going to have some effect, but the prime days of the week are going to be starting with Wednesday, US GDP. Now this morning we discussed GDP. Why is it important? Especially now that we had the Black Friday and today the Cyber Monday. We're going to see how strong is the consumer spending in the US, because 50 or 68% is made up of consumption in the US. This is why it's an important number. It's the alpha and omega of the US. Consumption 68.4%. Now I don't know how old this chart is, but it's fairly accurate, so it doesn't change that much over the years. Maybe it fluctuates, but the majority, so over half of the US GDP, which is made up of investment, government spending, exports minus imports, which is always in a net deficit, and the consumption. So you can see that consumption is a large chunk of the US GDP, which will be printed on Wednesday at 2:30 European time. Now the US was in a technical recession at the beginning of the year, or middle of the year. 2.6. Yeah, we had the bounce back in October. It could be back to the school spending, and then we have most likely a positive number again. So when the date comes, we can look at how is it going to affect the market. But other than that, we have the prime days of the week: Wednesday, Thursday, and Friday.
I entered into a buy on US 30.
You as well? What did you see?
It went back to it was a fake out of the wedge and then went back.
Damn, today is not easy.
And there is a good support. Lots of wicks. You entered into a buy on gold.
It's keep pissing
And
me
you
off.
can't help it, huh?
It's pissing me off today, gold. But the good thing is that I built up enough capital or leverage and buffer on the US 30 trades. If you look US 30 from a different perspective, so if I remove the wedge, what are we left with?
Consolidation.
Consolidation. Different ways to look at the
above
chart.
the
And what if I draw this trend line, which was broken, and then now it's retesting. So if I go then all the way to, let's say, 1 minute, which is very rare that I go down to the 1 minute time frame. You don't even have to go down to the 1 minute, but swing high to swing low, 61.80, boom. I'm going to hold the sell on US 30. We'll see. Today is an absolute shizzle. Not going to mess up the annual P&L on 1 month. Next week is December. It's only 26 days until Christmas. Can you imagine?
Yeah, man. Time flies.
Yeah, it's slowly time to slow down and just slide into the festive season. Alright, Arial font. Good analyst just warned about the gap, which has been concerning me since I woke up today. Question is price and market going to fill it up? Now, if you are selling US 30 along with me, you might want to lock in some positions. Because price has been creating a support at 34,180, so make sure you take off some money from the table. Don't leave it. Don't give it back to the market. So what I'm gonna do, take off some money. So Huang Nguyen Chanel is asking gold where RTP, wherever you want, brother. What do you think? Is gold or US 30 going to fill the gap?
Yeah, seems like it. I still didn't get out of the consolidation. Gold is pumping.
For now.
You always have to ruin my moment, man.
Yeah, it's when you think you have a good day, the world is yours, you have a good mood, and then you start trading gold, and then boom.
Finish him.
Destroys your day. But we still love gold.
It's very addictive. Right.
Is it gonna be lucky number 3, 4, 5? I don't know how many entries there were today in gold. For fuck's sake.
Where's everybody?
I don't know. Let me just look up. There's literally almost 100 people in the Zoom.
I'm sorry. I'm having lunch.
It's cool. Enjoy. Oh, gold is pumping now.
Yeah, after I took partial.
Oh god, like today when I sent out the position that Here's a sell. I'm not taking it, but it looks like it's going to sell off. I'm not taking position. Immediately as I sent out, and I wrote I'm not taking a position, it just started melting. Like, what the hell? US 30 is still consolidating. US 30 does look like it's going to skyrocket. Like it's building up a base, nice support. So this morning we talked about bullish and bearish factors on stocks. Can you give me some, start with the bullish, what bullish factors do you see on gold, on US 30, US stocks?
The Black Friday, as you said.
Mm-hmm.
Results and what else? Fill the gap.
Oh, let's see. Right, maybe it's time to close down the US 30 positions. That would be 150-ish, 120, 150 pips to fill that gap. I'm gonna lock in position. Do you have any runners on these sells in US 30?
Yeah, me.
Alright, close down the lower position and I'm going to now gold looks like it wants to continue lower. It's just an absolute pain in the ass today. What do you think?
Gold is very inconsistent today. I wouldn't touch it.
Just today?
In general, but today it's very, very, how do you say it? Popping out.
Yes.
Worst, but yeah. Let's...
I hope the 15-minute candle will close above the pivot.
And one of the reasons I usually market is crap and indecisive and has whiplashes is because of the market sentiment. Now, what do we know about the market today? Let's start with the market sentiment and let's start with the Federal Reserve. Was there any change since last week in terms of Fed communication, or did the Fed actually, could the Fed respond to the CPI data last week?
No.
Oh, no, I don't want to start trading. I'm already trading. So the Fed interest rate decision is going to happen on the 13th and 14th of December. That's when the FOMC meeting kicks off. There you go. Interest rate, FOMC statement, economic projections, interest rate decision, and a good old press conference on the 14th of December. So the Fed can really respond to, you know, the inflation data and on all the data like PPI, which is the factory gate numbers, the producer price index, which decreased. They can only respond on the 14th of December, and up until that, yes, we are full of events this week. The question is how market is going to react. So about the Fed, we don't really know anything. They couldn't really respond. The only one was Mary Daly from San Francisco, who actually had a chance to give a statement in a conference. And today we are going to have Bullard along with some other central bankers. Mazel tov. And yeah, we're going to have Williams, Bullard, and maybe another one. So I think these central bank speeches are going to give some guidance about what's happening, what's coming on the next interest rate decision. But up until that, we have the Fed meeting minutes that just released last week. And in summary, the meeting minutes was about that they mutually agree that interest rate in December shouldn't be, 75 basis point. A bit lower is sufficient. Meaning that they already signaled that they're going to slow down, because any decision that the Fed takes will have an effect in the economy around 12, 18 months down the line. So if they really start jacking up the interest rates, it could have detrimental effect longer in the future. So that's why the Fed is really cautious and started to slow down, or wants to slow down. So they already signaled that they're going to stop for a little bit. They're going to reduce ignore it, not stopping, but they said they already going to reduce the size of the rate hike. So instead of the jumbo 75 basis point, they're going to go ahead with 50 basis point. And does it mean that the Fed is going to completely stop or pivot? No, absolutely not. So the Fed isn't going to pivot, the Fed isn't going to stop, they're just slowing down. But in fact, the other thing that we know about the Fed decision is Jay Powell said that, and also the FOMC meeting minutes, which was released last week, actually said that they deem, or they seem, they want interest rates higher than the 5% rate, but they don't have to rush now, since inflation started to, what it looks like, it's peaking, or peaked. And Raul is on YouTube and he's right. Last days of the month. Sorry, can't join. You guys have some rest. No dirty jokes. Well, at least I have Marwan and Tuco because no one else wants to speak. With 95 people in the Zoom, yet no one is talking.
I'm here. I'm
Oh,
here.
and Sophie as well. Hello, Sophie. How are you, Arkadash?
I'm good. How are you, brother?
I'm very well. Much better now that I can hear your voice.
Did you guys miss me?
Oh, yeah. I always miss you.
Thank you.
Sophie has that kind of radiance of Mama Alpha.
The mother hen.
Yeah.
Yet she's not that old, but yeah,
Oh my god.
it's definitely a chick.
Tamas, I'd like to ask you a question.
Hi, Simon.
Would you like to answer? I mean, would you like to trade, or do you want to answer this question, which I may not be able to answer in a way that you can understand? Ask in a way that you can understand.
Do you want me to ask a question, or are you going to ask a question?
I'm going to ask a question, but I'm not sure I can ask it in a way you're going to understand. But if you bear with me,
I like women,
okay.
And in a, you know, if I'm on the top, I don't like man to man, but you know, never know. Who knows what future going to bring? So keep me updated. Send me a photo. I might change my mind, or give me an offer. You know, £20 is £20.
So you have it's a forex question, okay?
All right.
You have a difference in interest rates between two countries.
Yeah,
Okay.
interest rate differential.
Yeah. Now, the bigger the difference in this interest rate differential means...
How big? Is it very big, or?
No, it's it's about your size. Pretty small. But apparently I heard this. I don't know whether it's true, but if the more that there is a difference, the more likely that banks are going to invest in that forex.
But do you know what we talked about this many times? If you have a look on the global yields, this is the short end, the short representation. So you have US, Canada, Great Britain, Aussie dollar, Germany, and of course Japan with its famously negative interest rate. Now, this is the year-to-date performance of these government bonds. And this is the yield. So let's take in your example to show you a actual example, a real life example, a case study. We have the US and, for example, we have the German 2-year, right? So we have two currencies and two government bonds, right? If you want to buy the US bond, you have to put down dollar on the table. If you want to buy the German or the Japanese, you have to put down euro or Japanese yen, right?
Mm-hmm.
Now, if you as an investor are presented with these two free options, so the US gives you the highest return, which one would you choose?
Well, the US.
Yeah, it's a no-brainer, right? And for example, you are in Sweden, just for the sake of example, right? Sake of example. If you want to buy the US, if you want to enjoy the carry trade from the US government bonds, do you have to exchange your Swedish krona to US dollar?
Yeah.
How is it going to affect the exchange rate? It's going to push it to the favor of the dollar because you're demanding dollar to buy the bond, right? If demand is increasing, demand for the dollar is going to increase, right? And imagine that. No, it's because, you know, if there's demand for US dollar, then the price is going to go up, because something is more demanded, the price is going to go up. You know, iPhone 14, now it's a scarce resource, because you can't buy it in the shops, in Hungary at least, and people selling their freaking iPhones for ridiculous amount of money. So the higher the demand, the higher the price is. It's simple supply and demand.
Yeah. Okay. So it's the banks will put their money into that, because they need to put a lot of money to work. It's simple.
Right. It's the have a look on the chart I just showed you.
Yeah.
So if let me show you a direct correlation. So if you look at the white line, which is the US 2-year Treasury yield, right?
Mm-hmm.
How do you think that the US dollar is going to look like? And this is the year-to-date performance. The higher the yields went up, the bigger the demand was for the US dollar. And if you look at the currencies, guess what? US dollar followed the same pattern. As yields went up, demand for US dollar have highly appreciated.
Yeah.
And that is simple economics. But I'm surprised that you asked this question, because you're quite good in attending the briefings, and we talked about this.
Yeah, no, because when I heard this, I thought they were talking about the rates of the central banks, not the rates on the yields of the bonds.
Yeah, but the alpha and omega of bond yields comes from the Fed, the interest rate, right? Because that's the interbank lending rate. So the Fed is setting an interest rate that gives them deposits deposited by the banks overnight, as the interbank overnight deposit rate. And they set the interest rate for the economy as well. That the overnight rate is derived from that. So naturally, they're going to set interest rate higher, because, you know, they set the interest rate. So all the other interest rates are going to follow. Doesn't matter if it's consumer loan, bank card, credit card.
Yeah,
it follows the interbank.
Are the short-term ones more susceptible then to go up quicker, or doesn't matter?
That's different. That's the yield curve inversion. So when the lower end of the yield curve, because, oh man, we're going into details, but
yeah, I did warn you.
If you no, it's fine, but I'm trying to explain it easy to understand way. So this yield curve, no, actually the yield curve's this one. Now this yield curve, what does it represent? This is the yield curve. This is different to yield. This is the yield curve, which is
the 2 and 10 year.
2 and 10 years. So you can see it's deeply inverted, right?
Yeah.
It's even deepest than 2008 and 2000, which is quite shocking. And the reason for this is because the short end of the yield curve, the 2-year, demands higher yield, or gives higher yield, because what does the yield represent is the actual risk premium that the investors want for their money. Because they say, we know recession is coming, we only give the government money if we get a higher yield, higher risk premium. Mm-hmm. So if you look at the 2-year, and if I put the 10-year, you can see that we already have a gap between the two. Can you see it? This gap right here is that the yield curve is inverted, because the short end, which is the blue one, is higher than the 10-year, the long end, the 10-year. That's called the yield curve inversion, and that's what you see on this chart. So when the yield curve are inverted, investors, which is the smart money, the fixed income, and not the stupid concept that you learn on Instagram, this is the smart money. Investors want higher returns for their money. This is called the risk premium. So they invest only in the short term if they get higher returns, because they know that the recession is coming. In the long end is fine. They're happy with whatever they get, but for the short term, they're not crazy.
Mm-mm. Okay, thanks. Yeah.
If
Yeah,
I just
so-
normalize the charts, it wasn't many times when the short end was higher. Can you see it? Can you see anywhere where it was actually the short end was higher when the yield curve was inverted? No, you can't. You have to go back all the way to 2006, 2007 when the financial crisis happened. And look, the 2-year was higher, and then the crisis came, and of course the yields went back to normal. And that's what we're experiencing right now in forms of the yield. That's why the yield curve is inverted. And it's two different questions. You asked about if the interest rate is higher in one country, then yes, the currency in terms of exchange rate is going to tilt into the favor of the currency of the country which has higher interest rate. Whew.
Yeah, so you'd buy that forex. That pair to
Yeah,
buy.
absolutely.
Okay, thanks. Yeah, it's a lot clearer. Yeah.
You are very welcome. And just going to clean up. All right, so moving back, US 30 is again going into our favor as it did all freaking day, and Cant Gold isn't moving to our direction. Oh. Oh, damn. Was there a bank holiday last week in the US on Friday? There was. Thanksgiving, wasn't it?
Yeah.
Thursday.
Oh, damn. It's going to be quite a volatile market open today. Igen, tessék. Így van, szia. Tudsz jönni, persze. Jó, figyelj, hogyha beadod, becsöngetsz, csak beadod, akkor valaki átveszi, meg aláírja, jó? Mert... Jó, köszi, szia. Fuck you, gold. all morning, gold was moving the opposite direction to US 30, and now they walk hand in hand. The fuck? Who's in US 30?
I am.
Good.
Nice amount of profit.
Nice.
420 if I read the pip counter correctly.
Very nice.
I think I am using the same pip counter as you.
Most likely.
The blue thingy thing.
Yeah, Blue Tech FX or something.
Blue digits FX. Yes.
Yeah, this one
That's the
right
one.
here.
Yeah.
Blue Digits FX Open. It's a very good. I really like the new pip counter. It's so neat and polished and professional. Oh, US 30, what a beauty. But gold, on the other hand, is an absolute fucking cunt. Excuse me, my French. Ah. That's it. That's it. I'm gonna close down gold. It's an absolute headache all freaking day.
It's a stupid habit, isn't it? Like, you stop loss and then you try to re-strategize and look at it again and going for the best opportunity, and then
I close it down. I don't want to stress about this gold today. On some days, yes. Yeah, it's just want to get it out.
Yeah.
That's not even gonna look at it. That's it. Now we're talking. Mufundok Saluva is saying that bullish flag on DXY explained bears in gold. Yes, sometimes the dollar strength does explain or can be explained, or actually the weakness in gold can be explained with the dollar strength. But in my opinion, I don't really look at it because, you know, investors don't really care about whether the dollar becomes a little bit more expensive or cheaper. If they want gold, they're going to buy gold. And DXY is a currency strength against you know, other currencies, not against gold. Inte megint az Adri. So, two positions. No, actually, I have only one position left on US 30, and that's it. I'm not going to enter another position on gold. Absolutely not. Whoever is selling, well done. Hats off. Great catch, but it's just absolutely not mine. So I'm just going to leave it.
Probably a roll on a sell.
Yeah. Yeah, probably Rolly selling. Oh God. But you know why I'm pissed off? Not because the stop loss hit, it's because I'm missing out on gold.
UJ is moving upwards as well.
We'll be back in a second. Just have the doctor came to check on the baby. Need to do some measuring and all that. So, yeah, just watch the chart, have a conversation, and we have 22 minutes until the New York Stock Exchange open.
Massive volatility.
Raw.
Finish him.
I was gonna ask for that.
So do you guys want to hear a joke?
Oh god.
Go on in.
This time it's me.
Okay.
I will be the joke.
Very curious.
So, I don't trade US 30, never. And I really don't like it. I don't trade it. And it's not my thing. So, and, Thomas and all the community, they are, you guys are trading US 30 and literally slaying it and making profit out of it every single day. And one day I got excited and I just decided to take it too, to just trade US 30 with you guys. So that day, guess what happened?
You lost.
It
Guess
went
what
exact
happened?
opposite.
Yes, that exact day, out of 365 days of profit, that day it went to stop loss.
Oh, damn.
If this is not a sign from the universe telling me just to sit back and stay away from US 30, then I don't know what is. Literally, this is what happened with US 30. This is the last thing. I will never get near it.
It happens same thing with me on USD Japanese. Every time I got stopped out. So I decided, as you did, not to touch it anymore.
Yeah, I mean, sometimes you see the profit every day, daily profit, and then that day that you decide to get in is the stop loss day. And this is just a message from the universe, and I'm not fighting with it. I understand it, I got it, it's okay. I'm away.
I'm back. What did I miss?
Welcome back.
So
Gold
I'm
pumped
gonna I'm gonna start looking in more profits in US 30 because we have the gap from the market open after bank holiday. Not too confident. We need more confirmations on, to start the week. It's US was closed for 2 days, and let's wait for the market open to get some more information. So far, it looks like it found support at 34,100. So to avoid any dirty moves, best to lock in some profits, but not financial advice. You do whatever you want with your money. Boom, profit logged in, waiting for New York Stock Exchange open. And the stream is ending now on YouTube because I don't have enough likes. So thank you so much, guys. It was an absolute pleasure to have you. No more stream. So all of December will be only members or members only stream. Goodbye. not enough. They get scared.
With the likes.
I'm starting to believe this correlation of YouTube likes and gold.
It is scientifically proven, mate. It's been hundreds of times.
Oh, dear God.
But there's no way I'm going to re-enter into any position before New York Stock Exchange open after the US is closed for 2 days. Oh, almost 200. I'm gonna turn off again. See you at 200. So I'm going to delete the sell position on US 30 because majority of the profit is now logged. Now actually I'm going to just leave that potential forecast, but position closed on US 30, and I'm really considering to open a long position because it failed to break down so many times, but it's really uncertain, and we could have another retest, or we could have a full-blown gap retest, gap fill. On US 30. Which one is going to be?
How do gaps come into existence? What
So do you know how the logistics behind forex or stock market? Stock market is easier because it's centralized, but okay, let's keep focused on stock market for the sake of example. Do you know where the prices come from?
No, really. No.
So
I think you said before.
it's the exchange. Yeah, this is a centralized market, and I don't know whether I should go back to the history of the 1800 or 19th century, but basically, let's put it this way. So the exchange allows people to trade on, there used to be trading pits where people, there was an open outcry. They're shouting at the prices, I want to buy, I want to sell. That's the good old school, like actually the London Metal Exchange is still open outcry, but the trading pits have been closed in the US. So that's where the price came from, and then it was sent into the brokers in nationwide via ticker tapes. That's why it's called a ticker. So each asset has a ticker. It was a long script, and they put it was only updated for like every 30 minutes or so. So they put on the boards with the chalk. Edwin Lefeur, which is a great trader, by the way, he was a chalk boy. So anyway, that's how the market started to operate. And the centralized market is still in existence, but the thing is that they put like some kind of terminals, or they have access through Bloomberg, some of the big banks, to the market. And the price is derived depending on the bid and the offers. And that's how you come to the price that you see on the screen. But behind is actually big banks and people who have access to capital markets. They define the price. So whether they want to buy and sell, and depending on by how much, that's what you see on the chart right now. And what was the question? Sorry, how do gaps come into existence? Well,
Yes.
market was closed for 2 days, right?
Mm-hmm.
And when it opened last night, yes, last night. For example, Asia is the first who opens because the US is still closed. Europe was open. So maybe because the Asian colleagues, they saw, you know, the data, but actually there was no data on Thursday and Friday, but the news, for example, what we talked about, the Chinese lockdowns, it spooked them because they know exactly how the US investors react to any negative news coming out from China. So what they did is when the market opened, they just immediately offloaded the assets, and that has created a massive imbalance because there was no, how to say, when there is lack of liquidity, for example, during the Asian market, the market maker has to execute the order, the transaction at the price they sent in through the electronic device or through Bloomberg EMSX. And that's how gap come into existence. So the market opened here, but actually someone submitted that you know, he's willing to get rid of the position at the lower price, and that was executed by the market maker because there was no one else to trade that. And since that gap hasn't been filled yet. That's how gaps come into existence.
Okay.
And usually the gaps are around market open. We do have sometimes during the day as well, but it has to be, you know, it happens usually when there's a really impulse move, event or impulse move.
Okay. Thanks for the
There is a
explanation.
I mean, since the market is shit and you know, waiting for market to open, there is a good book, I highly recommend it, which is Reminiscences of a Stock Operator. It goes back to early 20th century. Reminiscences, how do you say that? This is one of my favorite books. Highly recommend because what was the guy's name?
Jesse
No,
Livermore.
Jesse Livermore, yes, is the author who was Edwin Lefebvre. So Jesse Livermore was, you know, he traded on a commodities exchange decades ago, like 100 years ago, and the emotions didn't change. It's still the same. He felt the same things as traders now, obviously with a less intense space. He lost all his money like 3 times, but then he gained it back, so he definitely knows about roller coaster and emotions. I highly recommend to everyone to read it. It goes back to the really origins of the stock market, how it became stock market as we know of today, and also and it doesn't go back as far away as during the, you know, in ports when people are actually started betting on which ship is going to come back in the UK or Holland. But it goes back to a decent amount of time where the ticker tapes started to become a popular thing. So highly recommend it to everyone.
Okay, you got it.
Hello, everybody.
Don Canavati, hello.
Hello.
How is the gold going? 30 moves for a week.
Don't talk about gold.
It was pain in everywhere.
It is painful. But end of the month, don't give back all the profits.
That one dirty move hit my stop loss.
Who has any open positions?
I have them USD. I'm gold still selling.
You still selling gold? All right. Well done, mate. At least someone is making some money, because I haven't made any money today in gold.
I'm selling from the top. Gold, Euro USD.
Best.
Oh god, people
I had a stop loss hit. Like, don't think I'm in a bad, in a good mood, but I recovered my loss.
good.
I'm gonna go daring and gonna go on a very small lot on gold.
You're gonna buy?
Yes.
Okay, I'll put my take profit at 40.
I'm gonna wait until 47.
I think it will continue to drop.
Wait, didn't the... No, 5 minutes. 5 minutes left.
Right. I entered into cheeky buy on US 30. And we have 4 minutes until the New York Stock Exchange open. Da, da, da. So, bit of cheeky buy US 30 since we felt to break lower. But I don't advise anyone to enter. This is quite risky. This is only speculating on the gap fill. But we also have, which I showed you on the chart, that we could have a retest of the resistance, fairly valid. And to be honest, looking at the fundamentals, stocks are bearish, but usually when it looks bearish, then it goes up. So it's an absolute mess.
What's that popping sound?
It's my keyboard.
My account going negative.
Hmm? Oh, and US 30 is bumping up before the open. Very nice. Counter trade. And we have 1 minute 20 seconds to New York Stock Exchange Open. Surprise, surprise, they did push up the number of likes to 209. It's not enough to see the New York Stock Exchange Open, sorry. Just joking. What do you think is going to be today with US 30 and gold? Is the bad news from Asia going to help to push up the yellow metal and maybe go against the trend and push up US 30? Because maybe you're going to have some very positive Black Friday data. We have 25 seconds. Nine, 8, 7, 6, 5, 4, 3, 2, 1.
Happy New Year! Oh, there we go. US 30 pumping up.
For now. For now. Who knows? Oh, it does bump up. I'm gonna pull it to break even now. And going to lock in some profits.
Ooh. I'm happy that I went into a buy.
That's how the alphas trade.
Yeah.
Oh, very nice.
Holy shit.
Holy guacamole. Lock in some
Holy
more profits.
Fuck.
Holy guacamole.
Oh, no. Don't come down.
It will come down sooner or later. Ah, this is how we trade. Alright, make sure you look in some profits, guys, because we could have... No, actually, the testing is done.
Are you sure?
Now, if you look at the chart, it went way beyond the test. Testing that. So we're going to have that gap fill. So in the zone at 34,000, look for a sell.
Check the 1 minute. Looks like the freaking what is that tower called in Dubai again?
Burj Khalifa.
Yeah.
I sure wish it'd take gold with it.
Alright, this is the sell zone in the gap. Keep your fingers ready.
So you're planning to sell US 30 now after this Khalifa story?
Khalifa, yeah, maybe.
It's a big W.
Big freaking W, yeah.
All we need is a C now.
Yeah, if the gap, I'm definitely going to sell it. When it comes up to 34,300, 34,300. Oh, my laptop just died.
Oh fuck.
No, it's fine because I have the stream and the Zoom going from my Mac Mini. Lock in some profits. Don't leave it on the table, guys. 140 pips. Beautiful. Another sell zone is coming. So make sure you make the money, take the money. Alright? Yes, no?
Yes, definitely.
What about gold?
You know what? I closed it.
I don't care about gold. Gold can...
You break up with gold, huh?
It's been a pain today.
But it looks cute on the 1 hour.
Everyone's relationship with gold is something like a car indicator. On, off, on, off, on, off. Hey, it's going good. It's going bad. It's going good. It's going bad.
So, hi everyone. So what's up with US 30? What's the pump for? I don't see anything and I only just tuned in.
It's the closure of the gap. Can you see Thomas's screen?
Whoa, whoa, whoa. It's in the gap. It's in the gap.
Yeah.
Alright. Oh, sorry. The gap is right here. Should we wait? We're entering to small sell now.
I'm gonna buy on gold.
Pivot. I'm not talking about gold.
I know. I'm waiting you enter to on the US 30, so I'll enter as well.
We don't talk about gold today, alright?
Alright. I thought we just talking about love.
Yeah. I entered into sell on US 30 based on the gap, but I'm using a very nice stop loss just above the pivot to around 34,316. It may come a little bit higher, so you know, if it is stop loss, you have to calculate your risk, so don't put everything on one trade. Keep testing the market.
Oh, it's looking very interesting.
So far it's going okay.
Ish.
For now. Just like David Attenborough in the documentaries. Dolly Company is safe. For now.
I think it's gonna retest.
Yeah, possible. Let's go down to... No, 15 minutes is fine. Boom, 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 boom.
Shit.
This is my first trade on US 30.
Same.
Like, ever?
Yes.
No way.
Yes.
I lost my US 30 virginity right now.
You serious?
I'm Syrian.
Very serial, yo.
Thanks, I'm honored to be the first.
Wow.
Well, that cherry is pop.
Can I sell now US30? I just missed the short of US30.
I hope I don't hit the stop loss. Oh yeah.
Come on.
Come to Papa.
Make the money, take the money, guys. Take some money off the table. Don't be crazy. I'm booking in some profits now. But so far, it's all right. How many was that? 150 pip. The move to the upside.
155.
150. Why did we enter? Yeah, 155. Yeah, 150. That was a hell of a trade on 2 minutes. We literally took the long position a minute or 2 minutes before it opened, and it pumped up. Yeah, 130, 140 pips. And now it looks like it found resistance. But it didn't properly fill the gap. So approach with caution. Anything is possible with this dirty 30. Right, you guys made some money with the pump.
I've never traded US30.
It's a good time to start, Raj, brother.
How are you, Thomas? You good?
Yeah, much better now I hear your voice.
Good to hear. Sorry, I've been on and off last whole week. Just had a lot of family thing going on.
Yeah.
So I'll take some time off.
It's kind. It's good to clear your head.
Yeah, I had a trade yesterday.
US30, guys.
Trade on gold. That's about it.
Gold, yes, gold.
Is it pumping?
It's
falling.
Dumping.
Gold's melting.
Oh wow! Good thing I don't trade that gold today.
Shit.
US. No, focus on US30.
Oh yes, oh yes, oh yes.
Oh
my
yes.
God.
Do not catch the knife.
I already have the knife from the top.
That bad boy's going down. Big time.
I'm
Gold
from
is
164
Mario.
on the knife.
It's running to 43.
How you doing, my brother?
163. Oh yeah, baby.
Yeah, but US30
down
falling.
to
Come on,
7
guys.
forward.
Let's cheer US30. Stop talking about gold.
I already break even in US30 with my virginity, so I'm fine.
I'm glad I was the one who popped the cherry.
Yeah.
You popped a lot of cherries today.
Oh,
I
Yeah.
give you the what do you call it? The honor. Oh.
Never forget your first love.
Hey. Oh yeah. Each time I will remember US30.
dirty 30. Very good.
Aye.
Oh, gold. Aye. Aye.
Ay. Where is Milad?
He's either carving out his liver to sell or celebrating that he doesn't have to
No,
do
the
that.
guy who sells his organs is Marwan, I remember.
Oh, and Milad.
Milad as well?
Oh no, who were you looking for?
I
No, it's
donated
only,
my crystal ball this morning.
I only sell organs.
See, I told you it's
You
Marwan.
wanna buy or sell?
Wow. 100 pips on US30. Just like that.
Still
Just
holding.
like that. Still holding, but I'm going to lock in some profits on this bad boy because that is... Woo! 50% done. What a sniper entry, ladies and gentlemen.
Heads up.
Beautiful trade, Thomas.
Indeed. Indeed. Finally, I'm back in the game.
How's the little one doing? Good?
Yeah, he's doing fine. Started reading
Hey,
that book today, Quantitative Trading. He didn't like that much about dark pools and liquidity pools, but
What did you
it's-
name him? US30 or gold?
well, the baby.
Yeah.
Yeah, that's a
Alpha
middle
Junior.
name, so you can choose. Alpha Junior.
One of them. That's gonna be his nickname. One of them.
Finally.
For now, he called him US1. Every year he add him a 1 until he's 30. Then he stop. And doesn't he stop aging?
Oh.
Am I right?
I think I'm gonna close my sell on US 30.
So I spent all the night trying to remember the shortcut of your name yesterday.
Why?
Because you gave us the explanation of TUHO.
Yeah.
Yeah, and I forgot already what was it.
The unholy one.
Yeah.
We actually have my, how to say it, nemesis in the alpha community. He or she is called Holy.
Nemesis sounds like Star Wars, you know?
Yeah.
Yeah. Thank you very much, Mr. Gold. Where are you going right now?
We're not talking about gold today.
Yeah, the one that shall not be named.
But,
Thomas,
you know,
quick question. You know, when it comes to US 30, right? Which chart do you normally look at? The one with the Wall Street or the index?
What do you mean? So like S&P 500?
You know, when you go to TradingView,
yeah,
type in US 30. There's obviously a few different options there. One with the Wall Street, then you got a normal US 30, which is from Capital.com.
Wall Street. No, I look at the US 30. It's Dow Jones, because it's not Wall Street. It's Dow Jones Industrial Average. It's the 30 biggest industrial companies. It's all right.
Oh, Dow Jones, yeah, because I looked at a couple of different charts and they all looked a bit on and off.
Yeah, because you have US 500, you have US 100, which is Nasdaq. You have the futures. You have many different variables. There are different indices as well, so you have to be selective which one you choose.
Yeah, I see that
Alright.
makes sense. Dow Jones ones.
Quickly, we might going to have a wick fill on Dirty 30. We're not waiting anymore. Alright, then the wick fill is coming, so you guys might have another opportunity to jump on this train. Let's have a look.
Jump on up or down?
Up and down. Oh, no.
Up and down.
Kind of looks like it's...
I'm not going up. I'm waiting until up, then I can go down.
Did you guys lock in some profit? Suddenly so quiet.
I locked in double profit.
What if gold was one of us?
Yeah, no. Ain't gonna happen, bro.
Good one, huh?
No.
No.
So that pump on gold was not gold, US 30 was 150 pips, and
admit it, you're
down it's now 70 pips, so almost 200 pips just on one single asset, 2 trades. Finally, back in the game.
In the 5 minutes time frame, 15 minutes time frame.
Just need 50 more pips and I'm at the 100% profit today. 50 pips
like most
somewhere.
Looks like gold and US 30 gonna fill the wick. up and down.
Are we looking at 34,272 as an entry or 273?
34 to 70. Yeah, if even that is, I think it's sufficient. I don't know whether it's going to have a full wick fill or, you know, just going to sell it from now. But conservative traders would wait for 34,300. Is the guarantees going to come up that high? You know, this is the answer I can't give you. I wouldn't personally. I'm not going to enter into trade now because I have the best possible position.
Nah, it looks like it's rejecting on the 5 minutes at 618.
Oh. Well, we could always have a dirty move, you know, just to spike up to close out the sellers who are entering now.
So 34,262 is probably 786 entry, maybe.
Anything is possible.
Yeah, if he breaks above 618, then 786 is the entry.
Oh yeah, Lemon on YouTube just described as some CFD providers called US 30 Wall Street. And one of the reasons for that is because if you want to use the name NASDAQ and US 30 and US S&P 500, you have to pay thousands of dollars to use at your brokerage service. So if you see a different name, so US30.pro or US 30 and something added to the name, that's because they're trying to avoid to pay, you know, that... no, how do you call that?
Subscription license.
License, yeah, to use the name. It's like you have to pay to listen to a song or to play a song in the radio. But anyway, that's why it might have a different name. Especially it's common during prop firms who want, because they use only demo, and they try to keep the cost as low as possible. So what they do is they just get the price feed, for example, TradingView or some other broker company, but in order to avoid paying the intellectual property rights or something to the stock exchange, they just use different name, but it's the same actually. And US 30, that's fucking beautiful.
Nah, it's gonna drop.
Euro USD make a dirty move today, by the way.
Which, tell me one asset which didn't make a dirty move today.
All of them. Even the Chinese yen did. And I think it's all caused by this one.
Oh man, I thought the day is over with the shitty gold trades this morning, but US 30 did save my ass.
Now you're done very well, Thomas, with the US 30, definitely.
Well, with these two trades, it's fucking textbook.
Now I've definitely missed it. Joined a little late.
Definitely textbook. So going back to the drawing board, because the only easy day was yesterday. Let's have a look. Those who missed the entry, you may or may not have another opportunity, because currently US 30 is filling the wick. So if you missed it, let me just go on to, yeah, this should be enough. So 15-minute chart, we could have a wick fill. It's going to be filled back up, and what it would look like is, you know, price comes up, taps into, I cannot give you an exact level because even myself I don't know, but the highest potential would be, if you look left on the chart, we have a lower high that could be most likely be filled. If US 30 wants to play dirty and wants to fill this gap right here, then it's going to go up all the way back into the sell zone and then melt. both of them are possible, but let's keep the first sell zone, which was the previous high, and then continue lower.
I have a question, Thomas.
Go on.
Okay, basically, as you're holding at the moment, the sales, right?
Yeah.
Your active trade. You know, as you're talking, telling us that it can go back up again to fill up the gap, then possible re-entry for everyone else. How does your psychology work? Because 50% you want to hold the sale in your brain cell, yeah? And the other 50% on your brain is telling you it's going to pull up. So even if you want profit, let's say a couple of grand, 5 grand, whatever, potentially you're going to lose it all if it does go back up to your entry.
What was my entry lot size on US 30?
I think it was 21 now.
20 lots. And how much do I have now?
3,000.
No, the lots. So it's don't worry about the money.
Sorry.
5. So it means I closed down 3/4 of the trade, right? So I left only a runner, and whatever happens, the worst case scenario, I will be in profit.
Yeah.
That's how easy it is.
This is where I struggle with normally. Like leaving it, say, a couple of grand running, when it comes to break even and lose it all, that pisses me off.
But you know,
that's why I don't deal with runners.
You have to be smart, especially if you do a challenge or something that, you know, at the end of the day, as if you do this for a living, the first and number one thing, you have to take care of the daily bills. You have to make sure that you have, you know, if the most successful traders who have, for example, a target, whether it's a challenge target or they have to maintain a lifestyle, then they need a certain amount of money. The first thing that they do as soon as they meet that target, most likely they're not going to trade for the rest of the month because they're fine. Why would they have the risk to fuck up the whole month if they're safe?
Correct.
Mine is the same. So I try to keep it safe as much as possible. If I make good enough money that I can live on for that, actually it's more than 1 month that we just made in these 2 trades. It's like half a year for some people, for even annual salaries. You know, just book it, close it, leave a runner if you want. That keeps your psychology healthy because you don't have the fear of missing out, which would risk to go back into a trade with the capital that you booked already. And which one is worse? Leave a runner and maybe risk a minuscule stop loss hit or a break even, or close down everything and go back, touch your capital again and risk that. I think it's option 1 is leave a small runner and play with it with the change, and that should be fine.
I thought like to myself, I'll implement that, you know, as time goes, because what I realized is as soon as the runner kind of hits my break even up, my mood kind of goes bad. So what I started focusing on just like, you know, better entry and short trades, you know, 20-30 pips, close it, walk away kind of happy, instead of kind of check your phone again, what's the runners doing again. Then obviously, like, you know, when you keep looking at the chart, your brain automatically figures out the next trade, always a new entry and whatnot, and that's how you get caught up.
Yeah, you have to draw a line. I mean, when the fun stops, when, you know, you make the money, like, even, you know exactly, Raj, how much money you can make with 10-20 pips a day.
Oh, that's crazy, man. It just depends. This is what a lot of I've struggled with at the start, and a lot of other people. It's not about 100, 200 pips or whatever. It's all depending on the risk you want to take and your entry, really. Like yesterday, I had a trade, very small, took
Still here, Raj?
Something on it that closed there 60, 70, 60, so it was about 126 pips trade on gold. It's just something new I'm testing, but that doesn't work with London or US sessions. This is what I was trying to figure out today.
Yeah,
it works exact opposite. So I've never had 100 pips trade before, but it's just a little test. But yeah, I'm probably gonna stick.
Whoa! Let's correct that. You haven't had a 100 pip trade before joining the Alpha FX.
I never had it. No. Now I have. So
now you have it.
Yeah. So this is what I'm trying to figure out, because unless you go try, as far as I know, both thing. You know, a little bit heavy size, lot size, and small as well. to see the profit potential, because I never thought if you run a 0.5 lot on a gold or a 0.1 or even a 1 lot, how much you can make potentially.
It's
sometimes
huge.
You think you gotta have. Sometimes you think like I need to get into like 5 lot, 10 lot to make
US
decent
30
amount.
now.
So that's something I'm gonna look into definitely very shortly. Probably from
Yeah, I
next
like
week.
to recently. I like to play around with bigger lot sizes, tighter stop loss, but the amount of stop losses you have to endure is significantly higher than if I would use smaller lot size, wider stop loss, which can be frustrating.
But you know what it is? At the end of the day, it's all right, because if you go $1,000 on the risk you want to put down, right? Obviously, you can split it 2 ways or 3 ways. Like instead of going for, say, gold, 10 lots on a 10 pip stop loss, obviously you can go for a 5 lot and have a 20 pip stop loss, or we can just break it down in 2 different trades. Just depends on what you are testing, really.
Risk appetite, yeah.
That's something I'm trying to figure out at the moment to see. But let's see how things goes. Just testing session to session at the moment to see.
Take it easy, brother. The market will be here tomorrow, next week, and you know December is coming. Liquidity is going to dry up after the 14th or 15th. Next year is going to be a new year, new budget, new portfolio allocations, new playing field.
What is it like to trade in December? I've never done it before.
It's boring as hell.
Slow moving,
But,
is it?
Yeah, it's going to be crap. But this month, we have the interest rate decision on the 14th from the Fed. That's going to be exciting. But after that, I don't really know what's in the calendar. But it's going to be significantly slower. So in between Christmas and New Year's Eve, it's going to be painful. So I'm not planning to trade in the time period.
So you're thinking like kind of halfway through December, you're gonna stop, kind of.
Yeah, absolutely. Because I want to do the, I talked about the macro trader course. So I want to do a series of video for you guys of how to analyze the market from, or as an economist, how to do macroeconomic trading. So I'm going to do what I do every single morning, from looking at the market sentiment, fundamentals, economics, interest rate differential that we talked about, Simon, or with Simon. So I want to do a series of like 6-8 videos and just upload it to the website so you can see how I operate fundamentally, how to do correlation analysis, things like that.
Okay, yeah, because I don't have a second pair. I'll just trade purely gold. So US 30 is probably something I need to look into, because as you are trading as well, obviously watching you, it makes a lot of sense. And obviously I need to work out the risk factor, lot size. Obviously it's way different to gold.
Yeah, you have to calculate it, but you will be fine. You're a smart guy.
We'll have to see. So my next target is before Christmas, obviously, I want to get a couple of funded accounts and get them passed, which I'm going to crack on probably next week. So I'm going to crack on from the morning as you do your morning briefings and go and trade with you probably most of the time.
Yay!
So yeah, we're going to go live together. So that'll be very good. I want to go with somebody good this time. Funded accounts. So yeah.
I will be good. I was good with Duncan Awati today as well. I will be good with you.
You are awesome, definitely. But yeah, it's the firms I don't trust, half of them.
You can't trust anyone, brother. It's a lesson I've learned.
Yeah, it's just, you know what it is? It's the tricky they have is the first month they wanted to wait basically a full 30 calendar days before you get a payout. And that's what the biggest trick is, because even if you made some money, yeah, you have to wait like a month to get paid and you'll end up trading. Something will happen in between.
But did you notice that it's much faster to pay in money to your broker account, to your brokerage account, than to withdraw? And that's because if the money is there for 24 hours, How many? Okay, this is a question for you guys. How many times did it happen to you that you made $1 grand or $2 grand? I was like, oh, fucking brilliant, sweet, I'm going to just withdraw it, and then you submitted the withdrawal request to your broker, and then you started trading again and you blew the money?
Many times it happened. Many times.
I knew.
I'm very straight up, Thomas. You know, if you lose it, you lose it. You know what I mean? Nothing. There's no shame.
Yeah,
to
it
admit.
happens with everyone.
If I tell you I've lost money, do you know what? Only thing I'm gonna get out of it is help. Probably gonna sit down, have a look what went wrong. There's nothing to hide, really. End of the day, it's your own money you're trading with, so.
Yeah. But the good thing is when you realize.
Of course, and if you don't ask,
you hide it. You're just lying
how
to
else
yourself.
are you meant to get any help if you don't even ask for it?
Yeah.
Hold on, here's the question. Angelo G on YouTube says, made 16% on my MFF 20k live account. Should I stop trading until the 17th when I get paid? So you got like 20 days and made 16%. So on a 20k account, that would translate into 2,000.
20k, and he made
3,200. 3,200. I would definitely say to stop trading, withdraw the money, buy another challenge, spread your risk into 2 accounts. Happy days. But if you continue trading, what's the guarantee you're going to keep that amount of 16%? It's freaking easy to lose. It's hard to make, easy to lose.
Oh yeah. You lose.
Hello,
quicker than
Thomas. I have a question.
Go on.
Actually, I'm a funded trader of FTMO 50k account. But before I joined this community, I blow my account to 3k loss. And today I just recover up to now I am loss around 2,800. So I just want to know that how I manage my risk.
But that's a very broad question. You need to narrow it down. How to not to blow your account, or how to what is the question?
Actually, I don't want to blow my account right now because I'm literally empty, my bank account. So that's why I just want to recover my account. Before I earned $2,000, but I didn't pay it from FTMO. Then I trade high lot size and just lost $3,000. So now I am afraid that I don't want to lose this funded account.
All right. So do you have a live account?
Before now I have a live account. Before I fail 3 funded account. So this was my first funded account.
Okay, so what is the question? How can you manage risk? That was your question, right?
Yeah. This is the question, right?
So have you watched any of the videos on the website?
3-4 videos I watch.
How many videos are there?
There are so many. I
How to
watched the
pass the
first 4 video.
Whoa! Slow down, Kashif. Slow down.
Okay.
I know you want to build this. I know it's inconvenient, but you know, if you want the answers, I can give you the answers, but you have to take the hits as well. So there are more than 2 or 3 videos on the website, and actually there is a video which is, can you read it out to me?
Okay.
What does it say?
FTMO challenge, how to pass.
Exactly. Did you watch this one?
I don't remember. I think
Introducing to trading psychology and risk management. So when you're done, come back and we can talk. All right?
Okay. Thank you so much. Thank you.
I know it's inconvenient, but you know, why did I put hours and hours to make these videos for you guys? And even not just me, but some of the best traders in the group. For example, Raul made some epic videos on funded challenges, on risk management, and you guys, Everything is there on the website, you're just not taking it. In the weekly webinars, there are some gems. Fibonacci Masterclass, which was actually made by Dave, who was on the FTMO leaderboard 3 weeks in a row. He's one of my good friends. Scalping Strategy by Raul, TMA by Milad, Fibonacci Masterclass, another one. And you guys, you keep still looking for the answer that you know, oh, how not to blow accounts, how to make money, but you're not utilizing the resources at your disposal. How can I help then? I did everything within my power.
Right, Thomas, I've got a question, mate, if it's all right, mate.
I'm married.
That was coming.
I was going to ask you, mate. I mean, I've asked a few guys in the group regarding the like.
You asked a few guys in the group.
Well, no, I mean, I asked.
Oh,
I don't really know
different
much
question.
about
Right.
the challenges and whatnot, so I asked the question, and I've had a few opinions. I mean, what I wanted to ask you was, like, say you had at a beginner level, if you had a few grand to play with, you know, let's just say 3 to 4 grand. Would
Asking
you
for a friend.
Yeah.
All right.
Would you recommend even bothering with these challenges, or would you just sort of, you know, work on the material that you obviously provided and, like, you know, just work on your own account? I mean, would it really be beneficial at a beginner level to go through these FTMO challenges? And
beginner level, it's absolutely 110,000%. I would not risk my own capital. 100% wouldn't risk a single penny if I had 2 grand, and if I was a beginner, I would not even attempt to upload any money to my brokerage account. What I would do is go to FTMO. They have a demo challenge account, and that will teach you risk management.
Okay.
It loads up very slowly, but they have... Where is the... Oh, free trial. Take the free trial 3 or 5 times. Journal your trades. Understand. You know, try out different things. In this session, we talked about some people likes to take trading with small lot, wider stop loss. Others use higher lot sizes, tighter stop loss. Practice. See which one works best. If one of them works out and you pass the trial, try to replicate the results. Try to use the same strategy over and over and over again, and then 3 times more. If it works, then I would take the challenge. And yeah, because the risk with the challenge is limited to the amount that you pay in. If you put your money on a brokerage account and risk it, the loss could be the full account.
Awesome, thank you.
You're welcome.
Oh, hi. Can I just make a comment just about the lot sizes? People with real, like, this is just my personal opinion, but if you have a small account, sometimes the market does these big moves really fast. So even if your stop loss is, you know, if you put a big lot on and your stop loss is close, if it makes a big move quickly, your trade won't get stopped at your stop loss. It'll get stopped when the move is finished, right? So you can actually blow your account in one move if you put too big a lot size on and it spikes hard in one direction. You won't get filled. Had it happen.
Yeah,
Just
we have
throw that out there.
We have other, you know, that's also your brokers wants to lose money because that's how they make money. There is slippage as well, especially on challenges. The slippage is something that's the S word. So, you know, the market, it's not the market who's against you, it's you against you, but then you have the technical drawbacks which makes it difficult to actually make money. It's like when you're going into the fun fair and you throw that stupid ball into the milk cans, which is full of you know, iron, and it's heavy, you cannot knock it off. It's the market is the same. And ladies and gentlemen, US 30 is running in 116 pips of profit as we speak. We did catch 150 to the upside, 120 to the downside. So my job is done for today. I wish everyone a relaxing Monday evening. See you tomorrow for the morning briefing.
See you tomorrow.
Goodbye, Thomas. Have a good one, mate.
Thanks, mate.
Thomas.
People on YouTube, thank you so much for joining. December will be fully closed, only for members that we've been doing live trading on YouTube. If you would like to join, enjoy the Cyber Monday 50% off from next week. There will be no joining opportunity. There's 6 membership left. I'm gonna close down the monthly because I don't want anyone, scammers. Take the last few memberships. I'm closing it down next week as December hits. Take it. This is your 50%. Use it, and see you next week. This is the Alpha FX. Oh, I haven't turned it off.